Hey, good morning. It's Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale By The Sea, of course. Lovely day out there as far as water goes. I mean, take a look at that water clarity. We went from no clarity to, wow, superb clarity in just a couple days here. You could see the second pylons back there. So beautiful. I could sit here, as I say, always and look at this just for hours. There's so many cool fish going in the background. Well, let's take a look at today's market and see what's going on. And by the way, this is the live Deerfield Beach Cam. If you're not familiar with it, one of the coolest webcams out there, in my opinion. Let's take a look. Let me do a quick refresh because I didn't refresh this for the last few minutes here. Looks like, oh, let's do a quickie coin flippy too. I'm going to not do the typical flip and just do it on my hand. And it says a bull today, so let's see what happens. And lots of Oz today. Oh, there we go. Low 1803 overnight and the high of 1819. It looks like it's holding above this 1800 level. Again, 1819 was a high overnight. I'm not sure if that was the overnight markets or this morning where we saw the 1819. Either way, we're holding above 1800. 24, let's see, 2390 is the low and 2422. I did see a dip below that 24 mark last night. I was thinking, well, they're going to do that again. But no, it looks like it's still hanging above that $24 mark. You know, folks, the hammering that we saw in silver wasn't quite as severe, I think, as many people expected. I think people were expecting maybe a sub-20 hammering. Doesn't mean that can't happen again, but hasn't happened yet. We're kind of hanging on to this mid-20s with silver. I like these new levels. I think we're here to stay. I think we're the 20s are going to mid-20s are going to be just like the you know how we look at the $5 to $10 range in silver for years. It's gone. I think that I mean. Those days are gone. I think the mid-20s are the new normal right now. How long it stays there, I don't know. But I think we're in for a big leg up here soon. And 24, the mid-20s is only temporary. It's just a good buying opportunity, in my opinion. Platinum holding on to that. Excuse me. Platinum holding on to that $1,000 mark. Look at that, 999 to 1,016, right in that range. All three metals up, as well as palladium a little bit. But again, we do so little in palladium sales. That's why I never talk about it. Why talk about something that hardly anybody buys? Well, let's see, get into some news here. Not a lot to talk about. I've got a new, I kind of just subscribed to Seeking Alpha. I've been reading their articles for quite some time and some other things. So I'm going to start reading some things from Seeking Alpha here and Gold and Precious Metals News. I got to admit, I just subscribed to it. I was subscribed years ago, and then I don't know what happened. You know how that goes. But I do like some of the articles on there, and we've looked at them before. They get put on ZH and GATA.org. So I figured I'd just go right to the source and subscribe to Seeking Alpha here. And again, I'll start looking at some of the articles and reading some more to you. Another site that I've been reading for quite some time doesn't really talk a lot about precious metals ever, hardly, but it does talk about the economy, and the economy has a lot to do with where precious metals are going or where they're not going. So I do like this website. One of the good articles here, again, not going to read this one to you. Sorry about that. It's like a tease. Here's an article, and I'm not going to read it to you. However, for a lot of you folks that like to read yourself, I just kind of wanted to hand you a couple things. AIER, American Institute for Economic Research, for you guys that like to read about economies and learn from smart peoples and not get the typical spin you're going to get on corporate news. This is a great site for economic stuff. Hurricane Ida, I just read this, threatens global plastic markets, and more or less it talks about that region, that area, having a lot to do with oil and petrochemicals and the production of plastics, which I didn't know was a big issue, but we've got some issues in the plastic markets going here. A lot of people don't realize it, that plastics are used, well, never thought about it, but polyvinyl chloride can be found in approximately 40% all disposable medical devices, including fluid bags, tubing, oxygen, masks, surgical gloves. Polycarbonate PC is a material choice for medical devices, replacing glass applications in blood. So plastics are used heavily in the medical industry. Not to mention, restaurants are pumped up again. They're ordering new plastic cups. There's a shortage of everything from plastic cups out there to all kinds of crazy stuff. So, I don't think a lot of people realize how important plastics are in our life. And what does this really mean? It just means that production is going to be pumped up. A lot of these factories that make plastics are going to start going to overdrive. And I don't think we're ever going to see cheaper plastics. I think plastics overall, they're using everything. They're going to be the rise. It's going to cause inflation in all different areas. I mean, it's not just metals, it's plastics too, folks. The idea that inflation is going to come down at some point, maybe a little bit optimistic, especially in some areas. But plastics right now seem to be, because of 2020, the closures, there seems to be a big shortage of that. There's another thing that's probably going to shoot up in price is plastics. Or the cost of plastics, but that'll probably come down a little bit again, given the fact that we were closed for a while, production was down. But it's not going to help with the overall inflation thing, and inflation is good for precious metals. Let's go into ZH. Again, not a lot to talk about as far as articles here, and this is good. I'm glad, glad it's over. I don't like how it ended. I didn't like how it started either, but I'm glad that's over right there. That's a shame right there, man. I can't believe they're actually doing that kind of stuff. That's a shame as well. And again, not a lot to talk about. I can just kind of hear and drop bombs on every one of these headlines and give you my opinion. However, I suspect a lot of you are like thinkers like me when it comes to economies and that kind of stuff. I'm socially liberal but fiscally conservative, which means I don't care what you do with your life as long as you don't hurt anyone else and ask me for the money to pay for it. That's me, and I suspect a lot of you are like that as well. One good article I did see in ZH is Parabolic Gold. I saw this in GATA.org as well. John Paulson warns inflation well above expectations is on its way. I think it's pretty obvious that's the case. But let's take a quick read on this. John Paulson infamously made his bones betting against the U.S. housing market over a decade ago when everyone else was waving it in with both hands and feet. Oh yeah, I think he made $20 million from what I read. Since then, according to his recent interview with Bloomberg, David Rubenstein, Bloomberg, another corporate trash, in my opinion, corporate trash, single view narratives. The billionaire has returned all outside capital. Now I don't have to write investors' reports or travel to meet with investors or worry about balancing funds and things like that. So that's allowed me to just concentrating on investing, which I like doing. So apparently he's retired, folks. I didn't know that, but John Paulson's retired. He's not running a company anymore, and he's got time to think for himself. That must be a nice thing. However, although his track record has been mixed since The Big Short, and he has not found the next big trade, Paulson is again seeing the warning signs of excess speculation. Well, it doesn't take a genius or John Paulson to spot that, folks. We've known that for how long? But let's read the rest of this. Warning about SPACs and seeing the most mispriced assets in credit once again. People look for, and John Paulson says, they look for get-rich-quick schemes, and they buy based on stories. And then they chase investments that are going up. Ultimately, those investments deflate and they lose money. That's typically most people. That's kind of what's happened, especially people that say, oh, I don't go in and pull my money out, even right now, even if the writing's on the wall. I'll just ride it down and ride it back up. Man, that's the dumbest shit I've ever heard, folks. But I'm surprised at how many people actually say that stuff. During the early 2010s, Paulson became better known as a gold bug and remained convinced of its potential. Yeah, we do. We believe that gold does, and this is a quote from John Paulson, we believe that gold does very well in times of inflation. The last time gold went parabolic was in the 1970s when we had 2 years of double-digit inflation. The reason why gold goes parabolic is that basically there's a very limited amount of investable gold out there. It's on the order of several trillion dollars, while the total amount of financial assets is closer to 200 trillion. So as inflation picks up, people try to get out of fixed income, they try to get out of cash, and the logical place to go is gold. But because the amount of money is trying to move out of cash and fixed income dwarfs the amount of investable gold, the supply and demand imbalance causes this gold to rise. So kind of an interesting little tidbit there. I wasn't familiar with that specific number. However, it's on $7 trillion. So he says there's only about $7 trillion in investable gold out on Earth. I'm not sure if he's including paper assets with that or just physical. It'd be interesting to know that. While the total, but look at the comparison. 200 trillion in paper financial assets. That's just incredible. Several trillion compared to 200 trillion. Huge difference there. So Anyways, he says down here, he's questioned, the interviewer says, so you're a big believer in gold as a good investment now? And John Paulson answers simply, yes. We thought in 2009 with the Fed doing quantitative easing, which is essentially printing money, it would lead to inflation. But what happened was while the Fed printed money, at the same time they raised the capital and reserve requirements in the bank. So the money sort of recycled. The Fed bought treasuries, created money, which wound up in the banks, and then was redeposited at the Fed. A big casino, folks, and that's my own words. And the money never really entered the money supply. So it wasn't inflationary per se. However, this time it has entered the money supply. The money supply was about up 25% last year, and the best indicator of inflation is money supply. So I think we have inflation coming well in excess of what current expectations are. And that's pretty much, again, something we've talked about for quite some time, is the expansion of the money supply. At first they were kind of keeping it inside their own little cartel. In 2008 they were doing that. But by the stimulus and by the money they put out there and that kind of thing, they have increased the money supply substantially out there. So John Paulson has a good point there. Paulson apparently is not a fan of cryptos, and he says, no, I'm not. And I wouldn't say that cryptocurrencies are a bubble. No, this is Paulson's idea. I would describe them as a limited supply of nothing. So the extent to there's more demand than the limited supply, the price would go up. But to the extent the demand falls, then the price would go down. There's no intrinsic value to any of the cryptocurrency except that it's a limited amount of digital ones and zeros. And I added that, I'm sorry. Cryptocurrencies, regardless of where they're trading today, will eventually prove to be worthless. That's an interesting, I don't necessarily think that's true, but it's an interesting comment coming from John Paulson, who's made way more money than millions of us combined. So I don't know. Cryptocurrencies, regardless of where they're trading today, will eventually prove to be worthless. Once the exuberance wears off or liquidity dries up, they will go to zero. I wouldn't recommend anyone invest in cryptocurrencies. Well, I think he has a point there kind of too as well. I think once the exuberance wears off, they will go down substantially, and they may end up just being regulated money markets to some degree. But let's talk about some other things. And what's he talking about? Shorting. So Paulson's best advice right now, simply and too boring for many, pay your house off. So I think the best investment for anyone with that type of money would be to buy their house or buy their own house or apartment. Interesting that Paulson says that. That kind of threw me off right there, reading that end part. I'm not quite sure. I've always thought the housing market's kind of in a big bubble right now. But however, in times of inflation, maybe not. I don't know. Good point there. Well, let's move along to GATA.org. Let me take a sip of coffee here. There we go. Not going to read any articles here. It's going to be a short day, folks. Not a lot to talk about again. Nearly 30% of Brazil's gold exports are illegal, report says. And again, this is written by Reuters, who just throws an emotional appeal in there and has no clue what they're talking about. It has nothing. Here, what are they saying here? Dispatch continues below. Let's just click that real quick. As I've told you, these corporate publishers like Reuters and all of them, they don't know what they're talking about. They make it sound like, look, mining done without regard to environmental regulation drives deforestation in the Amazon forest and has been shown to poison rivers with mercury. Come on, give me a frickin' break. The mining that's done in those small-scale mining is not destroying the rainforest at all. You know what Brazil is really pissed about? The country of Brazil, and they use the media with that spin, oh, you're ruining the rain. They could give a shit about the rainforest. Trust me, these politicians in Brazil, they don't care about the rainforest for the most part. And again, mining is not even a big issue. Deforestation is a major issue there. Mining is the little small wildcat mines all over the place. If you looked at them from an airplane, you wouldn't even see them. It might be a little tiny dot of orange at best. But most of them are even smaller than that. But what they really care about and what the Brazilian government really cares about and governments care about, they don't care about again, That's just a false narrative that it's destroying the rainforest. They want their taxes, folks. That's what nearly 30% of Brazil's gold exports are illegal. And they're only illegal because they're not paying taxes on it. These poor people that are out there mining are going around the government. The gold might be getting outside the country through their relatives or whatever, but they're obviously not paying tax on it. And that's the big issue with Brazil and most of these Central American countries. The idea that it's ruining the rainforest is total bullshit. Let's move over here. Although it does make for a real emotional reading when you read that stuff, and you see a native sitting there with a teardrop in his eye, looking over some dug up ground. Anyways, let's not go there. Freedom of Information lament is ironic as FT age concealment. I guess Financial Times got us a little bit miffed that Financial Times is not too concerned the fact that central banks have ignored their request for information on particular things, which probably has to do with the manipulation of the gold markets. But according to GATA.org, FT Financial Times, a corporate publication, which I don't even know why they would even give them even any airtime here, doesn't complain that they kind of think that it's okay to withhold information from the public, apparently. But that's typical of corporate mainstream news and corporate media. They're idiots. I'm sorry. Let's move over here. USA Gold September News and View says gold is also a lifestyle decision. I did not read that. I'm sorry. I kind of missed that one. And here's the article we just read on inflation. Well, folks, I'm going to move out of this one real quick. It's going to be, again, short video today. Why not? We can do a short video once in a while. If I was going to tell you what the best deals out there, best deals are still anything that you can pay under $100 per ounce for, and I think it's coming down a little bit more even. I've got a fantastic deal on, I've got Britannias, or whatever they are, 1 ounce silver Britannicas, for the same price as 1 ounce generics. And now why this deal lasts, I do have them in stock. You can buy the 1 ounce Britannias for the same price as, you could buy 1 ounce generics for. This is a great deal, folks. I have limited supplies, so if you're local and you want to come in and buy some from me, come by and see me. Again, as far as gold goes, the best deals out there, silver. Best deals are 100 ounce bars still, besides the Britannias that I got. And there's some other deals if you come in the store, we'll show you. And as far as gold, anything under $100 I think is where you need to be. Don't pay more than $100 premium on anything, in my opinion. Bars are still well under 80, not well under, but bars are still under $80, maybe under $75 per ounce right now. So those are a good deal as well. As you know, I only deal locally, so if you're not living in my area, I highly recommend you find yourself a good coin dealer, local dealer, even if you have to drive an hour or two to do it. I'd like to thank everybody for watching the video here. If you get a chance, hit the subscribe and like button. And we'll see what happens this week, and I'll do some more videos. Maybe a little more reading and a little bit longer, but again, short day today. Thanks for watching, folks, and have a nice day. Bye.